All right, welcome back, everyone. Now 6:23. Let's talk about inflation, interest rates. A lot of questions if inflation is transitory or if it is here to stay. Mike Reeves of Strategic Wealth Designers joining me now to talk about this. First off, good morning to you, Mike.
Good morning, Scott. How are you doing?
I'm doing well, and hopefully you're doing well as well. Quickly, how are you doing?
Pretty good.
All right, fantastic. So I said the word transitory. What does that mean in this context, and will inflation continue?
So what the Federal Reserve is really saying is this inflation spike that we're seeing, it's temporary. It's not going to be here to stay. They're saying that because of COVID, when you shut down a lot of factories and the ability to produce goods and services, when you start things back up, there's going to be a lot of demand at the same time. You see some price spikes. And folks around that have bought a 2x4 at $2, 6 months ago, and now it's $7 or something, they understand what's going on there. My concern, a lot of other financial experts, their concern would be this: we printed a lot of money. How can you increase those dollars in circulation and say that's just going to go away too? So very likely some of it's transitory, but some of it's here to stay for quite a while.
I know when I watch this on some of the business channels, they talk about the Fed and if they were to slow down the rates of bond purchases. How could that affect the economy? What are you thinking?
So what they're talking about there is the Federal Reserve goes out each month and they buy their own stuff. I know it sounds crazy, but they're buying their own bonds, U.S. bonds, mortgage-backed securities, all these different things, $120 billion every single month. And when they stop doing that, though, there's some concerns that interest rates might rise. And they tried to stop before in 2018 when Powell came on board back in October. The market fell in 2018 to the end of the year 15% because interest rates rose. The 10-year Treasury got a little bit above 3%. So there's some concerns there that if they stop that we're going to have some problems. It's hard to pull that punch bowl away from the party there.
All right, so the Fed Chair Powell was also pressed about unemployment. How did he respond to those questions, and what's the current state of unemployment here in the U.S., Mike?
So what he was talking about was the fact that the unemployment benefits, the additional benefits that the Federal Reserve they're handing out, that's going away. He wants to wait and see how that affects things, but unemployment's down to 5.8%. That's the lowest level since the pandemic began. And there's another concern with inflation with labor costs. So we're not the only ones stimulating out there. There are other countries and they're stimulating as well, estimated maybe as much as $90 trillion around the world. What if we have some inflation in labor cost? So again, concerns about inflation. He wants to talk it down to make things go smoothly. We'll see how smooth it goes.
We will see what happens. Mike Reeves of Strategic Wealth Designers. Mike, as usual, thanks for being here on a Wednesday.
Thanks for having me, Scott.